ASML has quickly grown out to be my biggest position after opening it recently with the drop after its quarterly earnings. ASML is one of the most important companies for all of us, even though you might not realize it all the time. In this video, I'll explain why, after listening to multiple podcasts, watching multiple documentaries, and reading the book Focus, I feel I have some knowledge about this company. But the deeper you go with this company, the more you realize how little you know. ASML was founded through a joint venture. Philips invented a new chip machine, wafer stepper, that was way more efficient, but didn't want to take the risk to commercialize it, so with ASM International ASMI, they found a partner to do so. ASM Lithography was born in 1984. The first years of the company weren't quite a success. It was hard to sell the product profitably. ASMI quickly walked away, and Philips had doubts as well. In the 90s, ASML survived by capital injections from the Dutch government, EU, and Philips. First profit in 1993, IPO in 1995, fast forward to 2010, the year they reached first light. Their first EUV, extreme ultraviolet machine, could be successfully used after years and years of trying. ASML sold stock to TSMC, Intel, and Samsung in 2012 to further fund the development of this innovation. In 2012, ASML bought 25% of Zeiss, a very important stake. In 2013, they bought Cymer, a key supplier of light sources. This is one of the most important parts of the machine. The purchase of this company was vital for scaling up EUV machines. More about them later. ASML sells machines crucial for making the most advanced chips. As we push for smaller, more powerful, and efficient chips, the goal is to pack as many transistors as possible on as small as possible surface. Transistors are switches in a chip. They complete calculations. Moore's law comes into play here. 1. Every 2 years, the amount of transistors on an integrated circuit get doubled. 2. Every 4 years, a new chip plant will cost X2 as much. The Intel 4004 in 1971 had 2,300 transistors. The Intel Core i9 in 2020 had over 10 billion compounding. ASML relates to the Rayleigh formula. ASML's Rayleigh formula is used to determine the smallest feature size that can be printed in semiconductor manufacturing. It's expressed as critical dimension EL K1, L numerical aperture. The formula helps to set limits on how small features, the transistors, can be based on the light wavelength and lens capabilities. The critical dimension is basically the amount of nm of a chip. I won't go in further detail for this video, but if you'd like to read about it more, you can go to the ASML page. But what's most important is that the wavelength of the light and the lenses are very important in this process. A lot happens before and after ASML's role in chip production with the wafer, but I won't go into further detail. A foundry uses 10 to 15 different machines in the manufacturing process. ASML is the most important and advanced machine and is like 30% of capex of a foundry. They sell these machines: DUV, Deep Ultraviolet, EUV, Extreme Ultraviolet, and High NA EUV, High Numerical Aperture EUV. They also provide services to their customers with every machine sold, even those sold 30 years ago, bringing in 5.6 billion revenue in 2023, 20% of revenue. DUV includes some of their oldest machines, like the PAS 5500 series. These systems helped shape the early chip industry and paved the way for complex semiconductors. These machines are still being sold and used for the less advanced chips 7 nanometers. DUV is the only market where ASML has competitors in the name of Nikon and Canon. But even here, ASML is the better player with 85% of market share. In the last years, a lot of DUV machines have been sold to China. They are not able to buy the most advanced EUV machines. Then their EUV machines, first officially sold in 2017, cost more than $150 and $200 million euros and require 3 or 4 cargo planes to ship. Nikon and Canon gave up on EUV because they couldn't make it work and it was wasting too much money for them. That's why ASML holds the monopoly. With the technology explained earlier, ASML's machines are able to produce the most advanced chips. This can currently only be done by TSMC. They are at 3 nm, with mass production of 2 nm expected to start next year. With the technology explained earlier, ASML's machines are able to produce the most advanced chips. This can currently only be done by TSMC. They are at 3 nm, with mass production of 2 nm expected to start next year. Without ASML, Moore's law would have been dead. Onto the high NA EUV machine, the first ones are placed at Intel in the Q4 of this year. With bigger production plans in the coming years, This machine will cost around 400 million euros, require 7 cargo ships, and could potentially make 1 nanometer chips, but we are not there yet. As you can see in this picture, DUV sales are still bigger than EUV sales, but this will change in the future. The big spike in DUV the last 2 years was because of China. They bought a lot of DUV, most likely being scared of more export restrictions, so they bought in advance. Sometimes you hear people talk about the China risk related to ASML, with it being 50% of revenue. This has been the case in some quarters. Historically, it's around 20%, with CFO Dassen telling it will be back to this level in 2025. Doesn't remove risk, but gives perspective. ASML's moat in terms of technical advantage on competitors is clear for many. They are light years ahead, with that brings scale for R&D to keep in front of everyone. What is a less mentioned moat is ASML's supply chain. Almost all of ASML's suppliers only supply ASML. Let's dive deeper into that. The laser ASML uses is made by Trumpf in Germany. This laser is made of more than 450,000 different components. This shows how hard this is. Trumpf only sells this to ASML. The laser is a specialized product co-developed by Trumpf, ASML, and Zeiss. Trumpf's laser is used to create plasma for EUV light, like I said earlier. The plasma reaches temperatures of over 100,000 degrees C, hotter than the surface of the sun. Carl Zeiss is another key player in ASML's supply chain. They have been working with ASML for a very long time. At the start, the cooperation weren't going as well as it does now, mostly due to the differences between the way the Germans and Dutch are used to work together. Zeiss makes the very precise mirrors and lenses to reflect the created EUV light and guide it to the exact position to print the chip. ASML and Carl Zeiss have a saying, 2 companies, 1 business. Zeiss therefore does not sell their unique products to competitors. The mirrors are so valuable that they are transported in specially designed vibration-absorbing containers, often escorted under high security. These mirrors are the smoothest surfaces ever created, with imperfections measured in nanometers. Cymer, bought in 2013 by ASML, plays another very important role in the process of EUV. Cymer was bought to gain control. Because Cymer is the home of the light source, Cymer's role is to create the EUV light used in ASML's machines. They do this with the laser from Trumpf. Additionally, ASML has a supply chain of more than 4,000 suppliers, mostly in the Netherlands, Belgium, and Germany. ASML has a long-term relationship with ASML and have noticed how cyclical this industry can be, sometimes leaving the suppliers in big trouble in the startup years of ASML. I also heard that the suppliers already have seen demand be much lower with the lowered 2025 guidance. The majority of the supply chain only sells ASML, especially the most advanced parts. This, together with the technical advantage, is their huge moat. Retired CEO Wenink said they are more than a decade in front of competition last year. Given that the competition doesn't have EUV and ASML working on a 3rd gen, Hyper-NA S to 2030, this seems more than fair. ASML sold just 449 machines in 2023, bringing in 27,056 billion. That is 61.4 million on average, so you don't have to do the math. ASML's machine are made in a clean room. You can see one in the picture down here. These rooms are cleaner than a nursing room. You need to walk slow, can't have smoked hours before, and can't wear jewelry, because this all can disrupt the making of the machine. ASML sells their machines to foundries, aka chip makers. They sell to both logic and memory foundries with names as TSMC, Samsung, Intel, Micron, SK Hynix, Global Foundries, UMC, SMIC, and so on. Now let's have a look at the management team. Last year, Martin van den Brink and Peter Wenink retired. Martin, the most important person in the history of ASML since 1984, eventually being CTO. Peter, since 1999, after working for ASML as a Deloitte consultant in the prior years, started as CFO, later as CEO. Reading Mark Hyjink's book, you see just how important both of them have been in the history of ASML. Together with Roger Dassen, current CFO, they decided what happened. But mostly it was Peter and Martin. Just like Peter, Roger used to be their Deloitte partner. Both Martin and Peter have retired last year, but I think it's still very important to know what they have done for this company. The current CEO is Christophe Fouquet. He has worked at KLA and Applied Materials before joining ASML in 2008. He has been vice president of EUV since. Insider ownership isn't super high in ASML. The salary of Peter Wenink and Martin van den Brink were pretty low compared to what they have delivered and how much impact that has, and compared to other companies. I'd expect the same with Christophe Fouquet. ASML's management is well known to be under-promising and over-delivering. In the last quarter, this was obviously not the case with the lowered guidance for the next year, which was quite the surprise. But this is part of the cyclicality of the chip sector. Risks. ASML is monopolist in EUV lithography and is unlikely to be surpassed in this. However, potential disruption could come from breakthroughs in fields like quantum computing or other technologies that I just don't know yet. This would be a very long-term threat, though. Chinese company SMEE, Shanghai Microelectronics Equipment Co. Min, is the only company that is still researching and trying for EUV after Nikon and Canon stopped years ago. The Chinese government invests billions of dollars in a Chinese chip industry, yet their best DUV machine has a much higher wavelength than ASML's best DUV machines, so they're not close to beating ASML, but you never know. Geopolitical China risk. Even though China's consuming at ASML will normalize from next year, the Taiwan-China risk still exists. I don't believe this will happen, though. China will shoot themselves in the foot. Because then they will not be able to buy any ASML machine then. But here again, you never know. Wouldn't be the first time we'd see irrational behavior from world leaders. Refusing to invest in ASML because of this risk is weird, IMO. If China would invade Taiwan and TSMC, NVIDIA, AMD, Apple ETC would be in way bigger trouble than ASML. And they're fine investing in those. New foundries would need to be built, HIASML. Other general risks. Finding and retaining top talent is a critical challenge for ASML. Any technological risk, cyber risks, opportunities. I think the opportunities are clear for ASML. The high-end EUV machines will continue to grow their revenue. Every continent wants to have their own chip industry, and this just helps ASML. This together with the huge demand for advanced chips for AI etc. ASML's balance sheet contains more cash than debt, a gross margin of 51% with a net margin of 28%. 2024 was supposed to be a transition year with big growth in 2025. With struggles at Intel and Samsung, the short-term demand is lower than expected. The rev growth will be 15%. Valuation on the investor day on the 14th of November, ASML confirmed their 2030 target you can see in the picture. With this info, I made a quick and simple valuation model. With a bear mid-bull scenario. 44B with 56% gross margin, 52B with 58% gross margin, midpoint, and 60B with 60% gross margin. Given that they have 51% gross margin with 28% net margin in 2023, I just assumed that every percent of gross margin expansion results in a percent of net margin increase. So 33%, 35%, and 37%. I use 3% extra return with dividends and buybacks as that's what we've seen the last years. Using 20, 25, and 30x PLE multiple, these are the returns you could expect. All these multiples are lower than the average ASML POE, but of course in 2030, future growth will be lower than it is now has been last year's. Therefore, I think 25 is a fair POE for the mid scenario because it's such a quality business. That is an attractive valuation for me to load this company up. I expect this to beat the market. What about you? Thanks for watching this video. I hope I was able to learn you something and hopefully make you excited about this machine of a business. I would appreciate a follow if you made it this far.